In this fourth Fafsa video, I will walk you through completing the parent section, calculating your assets, determining your SAI, and understanding what it means. The parent section often requires the most prep work, but I got you back. If your student has already completed their student section, you, as the parent, will receive an email invitation to complete your portion. You will have 45 days to finish the parent section. Otherwise, the draft Fafsa form will be deleted. If the parent started the Fafsa first, the student will receive an email prompting them to complete the student section. The process works similarly. To begin, click Get Started to visit StudentAid.Gov and log in to your parent account, not the student account. Each contributor on the Fafsa has their own account, and the information provided is combined to complete the application. You will see a welcome message indicating who requested your input on the form, which is helpful if you have multiple students in college. Important to note that just because you provide your financial information on the form, it does not make the parents responsible for the loans that the student accepts. Click Accept Invitation to begin working on the parent section. Like the student, you as the parent will need to watch 4 onboarding videos explaining Fafsa, the application process, and how financial aid works. If you're filling out the Fafsa first, you will need to provide the student's information before proceeding. The next section asks you as the parent to verify your personal information. You can update your address directly on the screen, but any personal details such as your date of birth, email, or phone number must be corrected in your account settings. The next screen asks the parent to consent to allow Fafsa to access your federal tax information. This consent enables your tax data to be automatically imported into the form, simplifying the process. If you don't consent, the student will not be eligible for federal student aid, including grants and loans. Even if you didn't file any taxes, giving consent is still required to qualify for federal financial aid. The tax information used is from 2 years prior to the Fafsa application year. For example, if you're completing the 2025-2026 Fafsa, tax information from the 2023 tax year will be used to assess the student's eligibility for financial aid. The next set of questions focus on your demographics to help determine if the student qualifies for certain type of financial aid. You will need to provide your marital status, then your state of legal residence. If you were born in the state where you currently live, enter your birth date. Otherwise, provide the date you moved to the state. Now we're moving into the most important and detailed section, parents' finances. While your tax return data will be imported into Fafsa through your consent, this section requires you to provide additional financial and asset information. The first question asks whether you or anyone in your household received specific federal benefits, such as the Earned Income Tax Credit, Medicaid, SNAP benefits, or Supplemental Security Income. These questions are for informational purposes only and do not impact federal student aid eligibility. You will need to indicate whether you filed your 2023 tax return jointly or not. If you filed jointly, specify whether it was with your current or previous spouse. If you filed jointly with the previous spouse and are now married to someone else, you must select No here. Next, confirm if the size of your family is the same as what you claimed on your 2023 tax return. Now, this page asks the parent to indicate how many family members will be in college between July 1st, 2025 and June 30th, 2026. While the number of students in college is no longer used to calculate the Student Aid Index, SAI, it may still influence financial aid decisions at schools your student applied to, as they can make certain adjustments. After entering the number, click Continue. Although you as the parent consented to have your 2023 tax return information imported into Fafsa, not all details are transferred. On this screen, you will need to provide additional information about specific items. First, did you report taxes and college grants or scholarships on your 2023 tax return? This usually applies to Fafsa applicants who were already in college during that tax year, not first-time applicants. The next question asks about the foreign earned income exclusion, which is reported on Schedule 1 of Form 1040. This is uncommon unless you worked overseas. If neither of these situations applies to you, enter 0 and proceed. This screen may require additional work, so you may need to save your progress and return to it once you have all the necessary numbers. For Fafsa purposes, certain assets are considered reportable, while others are not. You must report items such as bonds, brokerage accounts, cash, CDs, checking and saving accounts, HSA accounts, stocks, and child support received. Additionally, if you or your family own investment farms, vacation homes, 529 plans, businesses, or any other real estate outside of your primary residence, you must report their net worth on Fafsa. The assets that are not considered reportable and don't need to be included on Fafsa are retirement accounts such as 401k plans, traditional IRA, Roth IRAs, or SEP IRAs. You also don't need to report the value of your primary residence or personal property like cars, jewelry, and appliances. This list covers all the information provided in the Help section for each question. For the 2025-2026 Fafsa, you, the parent, will be asked about these assets in 4 questions. The first question asks to list any child support you received during the last complete calendar year. This refers to the most recent full year, not the 2023 tax return. For the parent, under current total cash, savings, and checking, enter the total amount of cash, checking, and savings across all your accounts. For both parents if you're filing jointly. Under current net worth of investments including real estate, total the value of any stocks, brokerage accounts, cryptocurrency, mutual funds, and real estate you own and enter the amount here. Net worth refers to the value of the investment or real estate minus any debt associated with the asset. The minimum value can be 0 but not less. Here's an example provided by Fafsa. If you have an investment worth $100,000 but owe $75,000 in debt on it, the net worth you need to report is $25,000. The value of these assets should be calculated as of the date you are submitting your Fafsa application. A negative value for one property cannot be used to offset or reduce the value of another investment. Here's an example provided by Fafsa. You and your spouse own 2 investment properties. First property has a value of $100,000 and the debt on it is $110,000. The net worth calculation would be $100,000 minus $110,000, which equals negative $10,000. Since the net worth can be negative, the net worth for this property is 0. Then let's say the second property, the value is $200,000 and the debt on it is $100,000. So the net worth for this property is $100,000. So when reporting the total net worth of investments, in this case, the total will be $100,000. The final financial asset parents need to report is the current net worth of business and farms. Similarly, you must specify the net value assets minus debts for each business. The value for each asset cannot be less than 0. Include all businesses and income-producing farms, but do not include your personal residence. UGMA or UTMA accounts, retirement accounts, investments, or money in checking and savings that you already reported in previous sections do not have to be included. You want to avoid double reporting assets. Each asset should only be included in one of the 4 questions. The parent financial section of the Fafsa requires gathering a lot of information about your accounts, and using a spreadsheet can make this process easier. Here's a sample example I created as a template. On the first tab, I classify all the reportable and non-reportable assets, along with which Fafsa question each asset should be included under. On the second tab, I categorize all the family assets, noting where they are held and who owns them. Based on this information, I can determine whether an asset is reportable. If it is, I add its value as of the date I'm filing out the Fafsa. For businesses, farms, and real estate, you will also need to include associated debt to calculate the net worth of the investments, which can't be less than 0. Finally, each asset is assigned to one of the 4 questions on the 2025 and 2026 Fafsa. And the totals are automatically calculated for you, making it easy to enter the numbers into the Fafsa online. You can create a similar template yourself, or if you would like to use mine, I will add a link to my Etsy store in the description. Many people say Fafsa is very quick to fill out, but there's a lot of work required to get to the numbers that you can put on the Fafsa. Once you have entered all the financial information, click Continue. Then provide the information for the other parent or spouse so they receive a notification that the Fafsa form has been completed for the dependent. Before submitting the Fafsa form, you will have the opportunity to review and edit the information. Once submitted, you will receive a confirmation that both the parent and student have completed their sections and the form is being processed. At any time, you can check the status of your form. You will also receive an email once it's processed. Additionally, you can download a copy of the submitted form for your records. You will then receive a summary of the federal student aid available, along with your Student Aid Index, SAI for short, which is sent to the colleges your students selected. The SAI is used by colleges to create the student's financial aid offer. If you're curious how the Student Aid Index SAI is calculated, you can refer to the Federal Student Aid Handbook for detailed explanation. However, it's very complex. Here's the general breakdown. For dependent students, which includes most undergraduates, the formula primarily considers parents' income and assets, as well as the student's income and assets. The parent income is adjusted by certain offsets and family allowances. The parent assets, after deducting asset protection allowances, are multiplied by 12% to determine the contribution from assets. So basically, 12% of parents' assets count towards what the family is expected to pay for college. Then, parents' income and assets are combined and matched to a table to figure out part of the SAI. Now, for the student contribution, we do the same thing, but with much higher assessment rates. The student income, starting with the AGI, is adjusted with some offsets and allowances, and then it's assessed at 50%. The student assets are combined and assessed at 20%, which is way higher than the 12% for the parents. The two student portions are added together, then combined with the parent contribution to finally determine the final SAI. Since you can see that the parent's assets are only assessed at 12%, while the student income is hit at 50% and assets at 20%, it really matters whose name certain accounts are in when filing out the Fafsa. If you want to go through an example, take a look at my SAI calculation video. In my opinion, SAI calculation is complicated and Fafsa really should show a breakdown of the SAI calculation so families don't have to just trust the number they get. Thanks so much for watching and good luck!